So for my particular school district I'm in, we are getting a $2,700 increase from the just general salary that I earn. That's actually a 4.5% increase. It ends up being a little bit less when you look at all the extra stipends I get for sports and academic, decathlon, things like that, but still a very significant increase. So I wanted to see how much money would I actually be getting in my paychecks. This will start in the middle of next month, middle of September. If you look at the federal income tax brackets, and I'll leave links to these videos, and you can just always type in 2019 tax brackets. For individuals that are married, any income from 0 to 19,400 is taxed at 10%. So I'm still paying the 10% income rate from my teacher pay. The 12% goes from 19,400 all the way to 78,950. This increase will be at the 12% rate. So taking my $2,700, I'm going to subtract 12% from good old Uncle Sam. For Texas, the mandatory amount that we put into our Texas retirement system is 7.7%. So when you subtract both of those numbers, it's going to be $2,168 for the year. I didn't actually do this particular number, but I can see what my actual paycheck will be greater. I get paid twice a month. So it's 24 paychecks by 24, and it should be about a $90 per check increase. That's assuming that they do the tax tables correctly, which I might have to look at my tax withholding and possibly adjust. So it might actually be a little more work on my part, but it should be at least a $90 per 2-week increase. Pretty significant raise. Let's say I take the $2,168 and I earn a 10% return. I'm going to put it all in a Roth IRA, which is tax-free growth. Remember, I'm already been taxed on this $2,168. If I put that all in the Roth IRA, it grows tax-free. Take it out tax-free. If you go to a compound interest calculator, $2,168. If I let it grow from now until I retire at 65, I'm already 38. So 27 more years will be 65. Let's assume a 10% interest rate. The future value of my money would be $28,442.47. That's just simply taking my raise that I'm about to get, putting it in a Roth IRA at 10% returns, and not ever touching that money. Well, the key part is not to touch it. $28,422. I could reasonably take out 4% of that money, 28,422. Take out 4%, 0.4. You get $1,137. If I divide that by 12 months in the year, we're getting about $95 a month in income for my retirement. My initial paycheck, I said, was going to be about $90 a month. If I leave it in with this growth for many, many years, I'll actually be getting more money per month than I am per check. Now, yeah, that is per check every 2 weeks. Can't get too ahead of myself with my happiness of this, but still, $95 a month for every month as right before I retire. That's a pretty significant amount of money there. Sure, inflation is going to make it worth less. I just want you to think about the numbers by leaving your money in growing for long periods of time. What happens? Now, for my pension, the way I figured out the pension increase, if you take $2,700, I multiply it by 0.023. In Texas, that's our percent that we're getting, 2.3% times the number of years you work. I'm just looking at my increase in my pension due to the increase in the salary. Multiply those, you get $62 per year. Not a huge amount of money, but that's extra from what I was getting last year. $62, divide that by 12 months in the year, and you get $5.16 per month. And that's my increase of my pension from TRS when I retire. And just from this raise, I am not counting my years of service. I'm not even counting this year of service. I'm just looking at the raise and how much the increase would be. Take my 95 a month from my saving into the Roth IRA, add the 516 a month that I'm getting from the extra of the pension, and we're looking at a little over $100 per month that will be in my pension. Okay. Now, how much is $100 per month or $1,200 per year? Pretty significant amount of money. I haven't done this calculation yet, so let me do it with you guys. So go to MoneyChimp, do compound interest calculator. We want to get to $1,200 a year. If I do 1,200 and divide by 0.04, instead of multiply by 0.04, I'm going to get the amount of money I'm going to need to have to reasonably take out 1,200 a year. That would be $30,000. So how much money do I have to put in right now, just one time, let it grow at 10% Roth IRA, 27 years. So we'll do years to grow, 27 for me. You might have a different time period, 10% interest rate. I'm trying to get to $30,000. And we'll take a guess. How much money do you think I would need to put in order to get to that much? Let's try $2,500 first. A little higher than I need. 2,300. I'm doing this on the fly right now. Pretty close to $2,300, right? So if I want to get the same increase in my retirement in 27 years from now, I could put in right now $2,300. If I put that in a Roth IRA and then I let it grow tax-free and then I take it out tax-free, it's going to be the exact same amount of money as what this pension is. It's actually going to be a little bit better than this because all the money will be tax-free, yet the $5.16 a month I'm getting in my teacher retirement, I will have to pay tax on. So it's a slightly better situation. My raise was $2,700. And leaving that $2,700 in is going to be a pretty good growth, right? Why did this number, $2,300, end up being smaller than the $2,700 raise to get to the same amount? But interesting question. Could you think about why? Do I actually have to put in less than what my raise is to get the same amount in retirement? Doesn't sound like it makes much sense. The taxes. Taxes are taking out of my paychecks now. So I'm going to make it grow tax-free in a Roth IRA. And that's why the difference is a little bit less, about a few $100s. All right, how does this change my total retirement picture? And I'm going to get my statement in the mail for TRS pretty shortly of my last 5 years' salary. The TRS online calculator is not really showing that anymore. I think there might have been some security concerns. So they're actually putting it via mail, which we should be getting in August or September for anyone in Texas. Your state might be different. I'm going to make about $68,000 this year. I don't know the exact number yet. I'm still waiting on my first paycheck of the new school year. It's going to be about $68,000. $68,000. Remember 2.3%, 0.23 multiply. You get $1,564 a year. Divide that by 12 months. It would be 130.33 cents per month. That's how much extra my retirement will be for me working just this school year. It's a good incentive for me to work hard, not only get my kids to learn a lot, but I'll be making a little over $10 per month every month I work to go to my retirement. How much do I need to save now in order to equal a year of service? I already did the math on that. If I save $3,000 right now, this one, $3,000, 27 years to grow, let's assume a 10% return, it ends up being $39,329. 39,329. Remember, I can reasonably take out 4% a year. So being $1,573. 1,573. Very, very close to the $1,564 that I'm getting from TRS. So if I save $3,000, I will get the year of service that I'm working this school year. Those two big numbers that we looked at. $2,300 would make the same amount of money I would get if I save my whole raise plus the TRS gain. $3,000 now would equal another year of service that I would get for pretty much being a teacher a second year. The raise that we are getting, $2,700, is very close, only $300 less than the year of service that I would get if I invested it. In a very fairly long-winded way of thinking about it, the extra pay increase I get, assuming I don't do anything silly with it, I actually invest it all, will actually give me an extra year of service in my retirement. Now, that's a pretty novel way of thinking of teacher retirement. I don't think very many teachers actually think this way, but this is the methodology that I'm trying to use in order to think about where I'm trying to get to retire very comfortably. Okay. So again, the calculations on this, what I do is I take the amount of money I make times it by 0.023. You should figure out how much it is in your state because your state will be possibly different, most likely different than that number. And then you, whatever that number is, divided by 12 to get your monthly income. Okay? That's a pretty simple calculation. To figure out how much money you need to save to get to where you are, you go in the compound interest calculator. Years to grow would be whatever your age is now to whatever age you're planning on retiring with the retirement benefits that will be available. I do a 10% interest rate. If you're more comfortable with a lower rate, go 8% possibly. I'll leave it mostly in the stock market to get to these numbers. And then you might have to fiddle around a little bit with the current principal. Typically, the numbers are anywhere from 2,000 to 3,500 or so, depending on how old you are. If you are younger, then the number will be smaller because you have more years for it to grow. If you're older, then the amount will have to be more because you have less years to grow, and so on. What you want to do is make the same number equal. Whatever this number is, you have to times it by the 0.04 to get to the number that you need. Okay. I left a video on how to actually do this calculation. There's also some calculations on online. The TRS online calculator will show this. Also, my Google Sheets that I made will also show you all the steps you need to do to figure out this number. If you're having any trouble actually figuring out what your number is to see an extra year of service, feel free to leave a comment down below. Or you could email me at lancekaminsky@gmail.com, and I could go over the calculations with you if you need to. So everyone, I know in Texas especially, you're about to get ready for school. You're probably already in your classrooms. In other states, you might be nearing the end of your vacation. So if you are, please continue your vacations. Enjoy your family and friends. If you're getting ready for school, let's have a great school year.